Well, as promised, we have the management of KEC International with us. No fireworks from KEC this time, as the core T&D business continues to lag with a tepid 2% growth. The working capital and the debt of the company also remains quite elevated. Rajiv Agarwal, who is the CFO of KEC International, joins us now to talk about that. Mr. Agarwal, good morning and thanks for joining us. I first want to just clarify, at the conference call you mentioned that for FY19 you expect a 12.5 to 15% revenue growth, but you had spoken about a 15% growth earlier. So have you scaled down your revenue guidance for the full year, and if yes, why is that?
So good morning. In fact, what we had guided earlier was 15% revenue growth, but during the year we had faced certain challenges in our international operations where due to the late receipt of the environmental clearances, our T&D revenue did not do well. Even in the India business, certain private sector clients, because of the liquidity issues, we had slowed down the execution. So that has actually, lowered our revenue for T&D operations for the current year. But we are still guiding for 12 to 15% because it really depends on the next 2 to 3 months how we are able to, if clients are able to, let's say, improve their liquidity position and they are able to pay up faster, then we will be able to scale up the execution and we will be able to meet our revenue guidance of 15%. So it would be 1 or 2% here and there, but largely between 12 to 15% is what we are guiding for the current year.
12 to 15. Okay. Mr. Agarwal, exactly what happened in the T&D business? Why is it, putting out such flat performance?
So what happened is basically, as you are aware that in the SAE operations we had received large EPC order which was supposed to be executed from Q3 onwards. But due to the late receipt of the environmental clearances, so been deferred. So we still have the order book, but that has been deferred.
Okay. So when you say the order book has been deferred, what about payments? Are you seeing any kind of delays as far as payments are concerned with respect to private projects? If yes, what is the quantum of those payment delays, and is that something that you expect to continue in the quarters to come?
We don't expect this to continue. Basically, some of the private sector clients, there have been certain delays in the payment. Because of that, we have slowed down the execution in Q3 and Q4. We have received some payment, but still, some more payment we are expecting. In case we are able to scale up, the clients are able to pay up for the entire dues, then we will again scale up the execution, and we are likely to meet the, our revenue guidance for the year.
So when you say you started the discussion by saying that the reason for the scale down in revenue guidance is challenges that you're facing in international operations. What kind of growth can we expect purely from the international business? I mean, what kind of slowdown are you envisaging over the next few quarters?
So we don't expect the slowdown in the next few quarters. In fact, we are expecting in the T&D business because we have the order book available with us. So our order book currently for the T&D business stands at about 14 to 15,000 crore. So that order book has to be executed in the next 1.5 years. So we don't expect in the next few quarters that revenue growth will be laggard. In fact, we expect that revenue growth will pick up for T&D business. And in the next few quarters, we are expected to scale up the execution for the T&D business, and that will give us a good growth on the T&D business, sir.
Can you just go through once again what have been the working capital pressures, and is that a bottleneck for execution?
For some of the project in India, yes, that was a reason for slowing down. So on the working capital front, as you are aware that in Q3 our interest cost has gone up. So we have taken certain initiatives to basically reduce our interest cost and to improve our working capital. As we have mentioned in the previous earning calls also, that in railway business, which is scaling up very fast, and this year again the growth has been almost 2x. There has been a challenges on the supply chain. Most of the vendors and the suppliers of because of the higher execution, they are facing the challenges in terms of the supply. They are not able to cope up with the demand that has grown in the last few years. And because of that, most of the vendors are reluctant to offer the credit terms, and they are asking for the advance payment, and that has actually reduced our creditors during the year, and that has put some additional pressure on the working capital. But now we are negotiating better terms. Some of the items where we were facing on the supplies, we have started manufacturing in our own factory. We have got the RDSO approvals, so we have actually manufacturing some of the structures which are required for the railway business, and we are negotiating better terms with our vendors. So that is likely to improve the working capital situation. Also, we are expecting some 300 to 400 crore advances. As you are aware that in the last quarter, we had received some large chunky orders from SAARC region, particularly in Bangladesh. We are expecting roughly about 300 to 400 crore of advances. Also, in the in January, post Q3, we have received a significant amount of money from Saudi, both retention receivable as well as progress receivable. So almost 300 crore has been received so far in this month. We are expecting some more payment from the Saudi client. So all these measures during the quarter will help us to improve our execution for the quarter, and also improve our working capital position. So we are expecting by quarter end, by end of the year, we expect our borrowings level to come down, and also we expect our interest cost will also come down.
Okay, sir. Thank you very much, Mr. Agarwal, for joining us. The stock is responding positively to the fact that working capital pressures appear to be easing in the fourth quarter.
Oh, yes. The market, by the way, has slipped. And now only 20 points in the green for the Nifty. The Bank Nifty is very strong because you have ICICI up 4%. Axis is the top gainer now, up 5% on Axis Bank. It's a fresh 52-week high. And how? So these two stocks alone, ICICI and Axis, I think if you see the contribution plate on the Nifty Bank, you would see 190 points from ICICI Bank alone and about 140 from Axis. So corporate banks making a bit of a comeback. Ashwini Gujral, Mitesh Thakkar back with us. Prakash Kaba also here. Ashwini, it looks like a bit of a strong day for Bank Nifty compared to the Nifty. Your thoughts, and what are your stock calls now?
Well, that appears to be the case, but this is more, choppiness than a big, clear uptrend. And that way, yesterday's low is very crucial. So people should use this decline to buy. Your stop is hardly 50-60 points. But if we start to cross 10,700, that is when you'll get the reward. So I don't think selling into this decline is very useful. And particularly if you have large stocks which are higher and a lot of other large stocks which have come off substantially, the risk reward is still on the upside. Having said that, Axis Bank is a buy with a stop of 685, target of 720. ICICI Bank is a buy with a stop of 350, target of 365. Both these guys are now at fresh highs. So if a market is making stocks do fresh highs, then it's not such a bad market. RIL is a buy with a stop of 1210, target of 1245.
Okay. Prakash and Mitesh are also with us. Mitesh, what are you trading at 10? Are you looking to trade the index at all, or would you stick with stocks?
No, Lata, we have taken some short positions on the index. I was saying that 10,737 for 50 would be a tough level for the markets to get past. So we sold some current expiry call options when the Nifty was close to about 10,695. And I think that possibly 10,750 to 800 strike call options might expire worthless for tomorrow. Having said that, I think the stocks which I have, Axis Bank is on my list as well. It's moved up slightly, but because this stock has gone up so much, I think intraday you might get it around 690. Best level to enter. Keep a stop at 678. Look for targets of 715. And HUL is a sell. Stop at 1761 for targets of 1715.
So it's one of those amazing days, Anuj, when HDFC Bank and Kotak Bank are not contributing, and then Nifty Bank is up almost
200 points, with almost 200 coming from ICICI alone, and 150, 160 from Axis. Yes.
Okay, Prakash, good morning to you. What are you trading?
Good morning. Looks like Nifty is a buy on dips. The best place to buy Nifty is when it takes out today's high. If not, at least yesterday's close is a good enough. So dips until yesterday's close are buying opportunity with a stop below yesterday's close. Yesterday is low. So far, Bank Nifty looks more stronger than Nifty. I think it should hold. As long as even if it keeps here, I think short covering would propel it to much higher levels by tomorrow. I like two stocks, both mainline. One is Reliance Industries, certainly looking good to me. Can climb to levels closer to 1240 to 1250 zones. Stop below 1210 should be okay. Mahindra is another stock that looks good. Looks like it's forming a base here. Good place to bounce from if it has to. Target at the upside closer to 700, maybe 715 in the days to come. Stop below 670.
Okay, well, I know the limelight is being hogged by the banking space, especially the corporate banks. But don't lose sight of IT, because a lot of IT stocks are also picking up. Wipro is at a fresh 52-week high this morning, so keep an eye out on that. HCL Tech, of course, has been doing very well post its numbers. That stock is also up over 2%. And now a couple of these other heavyweights like L&T and Reliance are also making their presence felt. So those are the two stocks that are looking, that are now up almost about 1% or so. But in terms of big numbers to watch out for, Bajaj Auto is expected to come out with its numbers later this afternoon. Remember, it was a very weak Q2 for Bajaj Auto because margins had fallen 300 basis points on the back of the aggressive pricing that Bajaj Auto had undertaken in its entry-level segment. This quarter as well, it's expected to be a mixed bag for them. Revenues will be very strong because volume growth has been very healthy for them, both in exports as well as on domestic front. 26% overall volume growth. But the big pain point really is margins. 300 basis points fall in margins is what the street is expecting for Bajaj Auto because of multiple reasons. Higher raw material costs, higher discounts they had to offer to clear their inventory, and very aggressive pricing in the entry-level segment, especially with the CT100, etc. All of that will cause realizations to fall both quarter on quarter and year on year for Bajaj Auto. And I think that's something that the street has already priced in because the stock is down almost 25% over the last 12 months or so. So weak numbers expected today, and stock even going into its numbers a bit subdued.
Okay, Ashwini, you want to take a jab at Bajaj Auto?
See, overall, the auto space is very weak. Now, Bajaj Auto, etc. had fallen much before Maruti did. So, I don't think you want to get into Bajaj Auto today before the entire sector bottoms out. But maybe 2420, 2450, these are the levels where it has some support, but it's already below its 200-day moving average, no major trend. So, it's basically 2400 on the downside, 29 on the upside. So that way you can play a sideways range.
Okay, just want to point out, I think just keep an eye on NMDC. That's a stock which is surging. There's this, mining disaster in Brazil, which has pushed iron ore prices over the last 2 days by almost 5 to 6%. So that's the reason you're seeing this bit of surge on NMDC.
Okay, that's unusual.
That's the news impact which you're having right now.
Okay, just a final word from Mitesh on Nifty Bank. I mean, that's just putting on weight, and about 170 points out of that 215 is coming from ICICI Bank. Would you trade the Nifty Bank itself separately, Mitesh, and any of the other banks? I mean, Bank of Baroda, Bank of India, the ones that we didn't discuss.
Lata would prefer trading Axis and ICICI Bank. I think that's clearly where the outperformance is coming from. That's clearly where the short-term chart patterns are very strong. I talked about Axis Bank giving some mild declines during the day. I think that's happening out. Around 690 still offers a very good entry point, and I think 715, 720 should be a good short-term target there.
Okay, well, since we are talking about ICICI Bank, a quick, in the last 6 months, though, ICICI Bank has gone up from 300 all the way to about 380. It's just come off a tad bit at this point in time. But Prakash Gaba, any quick thoughts on how to approach these twins, Axis and ICICI Bank?
I certainly like ICICI Bank. Today's momentum certainly is good. I think it's heading to levels closer to 370, 375 zones. So yes, ICICI Bank is certainly looking good. As far as Axis Bank is concerned, even Axis Bank is good. I would say that it's in a good breakout. Axis Bank should be seen from a slightly longer term perspective. I have a feeling it can climb to around 750 zones.
Okay. Thank you, gentlemen, for giving us your views on a bunch of stocks. But yes, we are not taking our eye off banking stocks. After Axis yesterday, today all eyes are on ICICI Bank. That stock is also moving up today. Abhishek is here to tell us what the street is expecting. Abhishek.
Well, Lata, analysts on street are working with a number that would be strong for ICICI Bank in terms of Q3 FY19 numbers. So slippages are expected to decline sequentially to about 2,400 to 3,000 crore, and that compares to about 3,120 crore in the previous quarter. Now, the total stress asset book is close to 23,500 crore, which forms about 4.3% of the book, and that movement will be seen closely in terms of what the management gives the guidelines. So loan growth is expected to pick up to 14 to 15% YOY in this quarter, given the fact that last quarter loan growth was at 12.8%. We have seen with private banks, the loan growth coupled with product pricing has led to, sharp increase in the net interest margin. So net interest margin for ICICI Bank was at 3.35% in the previous quarter. There can be gains or recovery from NCLT accounts which can aid in recovery. Our polls suggest NII growth of 18.3%, which is the highest in last 15 quarters, while the bank can report the first time profit growth in last 7 quarters. Back to you.
Okay. Well, thank you very much, Abhishek. We'll watch out for those numbers very closely. And expectations would have gone up a bit after the way in which you have got Axis Bank's numbers shaping up. Okay, with that, let's shift to the macros. The big macro that's on our radar and absolutely on us in 48 hours is the vote on account, which will also double up as a budget. Remember, it comes in a very interesting backdrop with an eye on the elections. The Congress President Rahul Gandhi has already promised a minimum income guarantee. And the expectations are that you are going to see it getting outdone or at least matched in the budget itself by the ruling party, by the government. What exactly should we be prepared for in terms of a farm package or in terms of a BPL incomes package, and what will it do to the fisc? What is the space available in terms of tax collections and non-tax revenues? We have two economists joining us. Upasana Bharadwaj, the senior economist at Kotak Mahindra Bank, is with us. In a bit, Professor Himanshu, the Professor of Economics at JNU, will also be with us. Upasana, what is your expectation in terms of the size of this farm package?
Well, Lata, I think, it is a little uncertain because there's been a lot of noise about what could be the exact nature of the package, what could be the coverage. So all in all, there have been various estimates that have been floating around. And our own estimates suggest that, it's a wide range of costs, but depending on how the coverage and the scheme, features would be, it could be anywhere between 0.4% of GDP to 0.8% of GDP. Of course, these are the gross numbers we're talking about. Then comes the second leg, wherein which are the schemes which could be subsumed under these, income support measures that we are talking about. So hence, the number could be much lower than the gross number that we're talking about. Gross numbers could be anywhere close to up to 1.5, 1.7 lakh crore. But depending on how much of the subsidies or other schemes like the Manrega and all get subsumed in these, we'll have to see exactly how the net number really pans out. So hence, we do need to see exact details of the stimulus package that we're talking about to really take a call on whether that, as in what is the impact on the fiscal eventually of those numbers.
Okay, there are some reports indicating that, after looking at everything getting subsumed, etc., the net number could be about 70,000 crores as a cost to the centre. Now, it also depends on the centre splitting the costs with the participating states, etc., what the ratio would be. But what are you looking at on that account? What could the average number look like?
Yes, exactly. I think 0.4% is what I mentioned earlier, is what we're looking at. That amounts to about 80,000 crore. So that is where the net cost to the centre plus state would be, and then that further could be split between centre and state. So it could be a 50-50 or a certain other proportion. So hence, maybe to the centre, the cost could be around 0.2% of GDP.
Okay, we also have Professor Himanshu joining us from JNU. Good morning, Professor Himanshu. Thanks much. What is your sense, going by what you are hearing from the Congress president and expectations from the ruling party? Are you expecting a large budget? People are now talking not in terms of thousands of crores, but in lakh crore terms. So are you pretty sure that some 1 lakh crore, 2 lakh crore package is coming?
Well, there is a pressure on the government to do something. This is an election year. Ideally, it was supposed to be a vote on account, but it's supposed to be a full-fledged budget with big announcements coming in. But really, the problem is, while the crisis is really big and quite severe, the government has actually run out of finances. I mean, they don't have finances which can help them to undertake big ticket announcements. And I really don't think that the government is in a position to do anything substantial in terms of either in terms of income transfer or in terms of increasing spending by a significant amount. In any case, remember that the budget will take effect from April onwards. In the sense, by the time actually the budget proposals are going to be there in the in the field, the elections will be already on. So I am not sure whether this is a good strategy to promise so much of it and increase budgetary allocations. Other than the optics of it, I am not sure it is going to give political dividends, or it is going to be actually really dealing with the problem of agrarian crisis or the problem of unemployment that the government is struggling with. They have only 1.5 months to deal with it before the code of conduct becomes applicable.
So what are you expecting to hear, sir? Will they, if you look at the current subsidy packages, it's 1.7 lakh crore for food, fertilizer is another 70,000 crore, and then if you take a little bit of kerosene, I mean oil subsidies and some other subsidies, say railways, etc., then you probably at the most can stretch it to a little over 2 lakh crore, maybe 2.5 lakh crore is available. Do you think that will be redistributed, or is it very difficult to touch fertilizer subsidy or food subsidy, and this will be over and above?
I mean, I no government, and let me stress this, just going before the elections, when a severe agrarian crisis is staring at you, if you are thinking of doing away with fertilizer subsidy of 70,000 crore rupees by increasing fertilizer prices, I mean, there cannot be a better way of committing suicide. So I don't think the fertilizer subsidy is going to be subsumed in any case. You remember, since 2011, when the NBS, the nutrient-based subsidy regime of fertilizers came in, fertilizer consumption per hectare has gone down quite drastically. And if you are planning for raising the fertilizer prices in the market by another substantial 400-500 rupees per quintal in the short run, and maybe more in the longer run, I mean, nothing can be more suicidal than that. So I'm not sure that the government is actually going to do away with the fertilizer subsidy. The big ticket items are basically the fertilizer and the food, and none of them, I mean, petroleum subsidies have more or less come down to they're insignificant. So they're not the big ticket subsidies in that sense. So I don't think the food subsidy part, I mean, you have promised MSP and you want to go and do procurement for crops, because that is also part of the package of the government that they have announced last budget. So I don't think the food subsidy will be touched, or even the fertilizer subsidy will be touched. And I'm really confident that at least these two, no government will touch it, not at this point of time.
Okay. So in terms of, Himanshu, hi, good morning. In terms of the direct support to farmers, I mean, what is that key number that you're watching out for? Upasana was telling us it could be somewhere to the tune of 80,000 odd crores. And also, in terms of farm income, farmer income, what kind of scheme do you think could be doled out?
I mean, there are lots of, I mean, I'll still call them rumors only. I mean, there are lots of things that we are hearing from so-called confirmed and unconfirmed sources, that there is going to be some kind of an income transfer program like the Raitu Bandhu or the Kalia program of Odisha, and with some kind of a 50, because the budget is simply not there. I mean, the government simply doesn't have the financial bandwidth to undertake any of these. The other proposal of actually undertaking it in the collaboration with the states with the 50-50 partnership for budget sharing is, again, I don't think is feasible. I mean, remember, already cumulatively state governments have announced loan waivers of 1.9 lakh crores. I mean, that's a big amount of money that has already been locked in. So I am not sure if the state governments are willing to go upfront and share that kind of. They're actually really a revenue problem in most of the states where we are talking about financial crisis, I mean, agrarian crisis. So I'm not sure they have even that minimum bandwidth to continue for any such adventurism of providing income support either at the central level or at the state level. So I'm not sure what kind of budget is going to be, but certainly these are not things which are, and they will be very costly. And so, I mean, whether you do it per family or do it per acre, none of these are going to be cheap options. So whatever calculations are being done, they are all very ad hoc calculations. And the moment you try and go and identify and go on the ground trying doing it, it will lead to more complications. So I'm not sure if these are the directions in which the budget should be moving. But as you know, this is election year, anything can happen. But I'm not sure the government, central government or the state government have the margin to do anything like this.
Okay, so Professor, would you say that, the Congress president has already announced a minimum income guarantee. Now that's no longer buzz. That is an announcement of a minimum income guarantee. Do you think, first of all, we have the wherewithal to identify people who need that kind of income, and to match that, therefore, can the government announce anything? And finally, will it only be an announcement? Should the economy not take it seriously?
Let's be clear that it is, as of now, only a political announcement.
Yes.
No details have come out either from the Congress party or from the president of the Congress party in his speeches, or there is a document that is available there. But remember, let me start with something which is, we already have an income transfer program for the poorest of the poor, not the poor only, but the poorest of the poor, and that is for the disabled, the widows, the elderly, and that is the National Social Assistance Plan, which is the old age pension and various other things. Now, the amount of that was fixed at around rupees 200 per month per family in 2006. In the 8 years that the UPA was there, that amount was not raised to, even the inflation was very high. It didn't go up by a single rupee. This government, when it came, it promised that it will basically at least look at all those things. In the last 5 years, we have not seen even that going up from 200 rupees to anything. That the minimum that was demanded was 500 rupees or at least 1,000 rupees. As a decent sum of money that is going to be given. And if you're talking about a large sum of money or even a minimum 1,000, 2,000 rupees, financially, I don't think there is any possibility of something like this happening soon. So I don't know what kind of a plan they have in the mind. But I have a problem with this kind of a scheme in a sense that it is something which is, and let me be very upfront in saying that it is just before the elections trying to give money to the elections. I wouldn't call it a bribe to the voters, but it certainly is something which is trying to appease the voters in a very, very different way. And it is not going to take care of any of the problems that we are talking about. It is not going to raise prices in the rural area for the crops in the agricultural sector. It is not going to take care of the problems of rising costs, input costs in the agricultural sector. It is not going to solve any of these problems. But it is basically taking away the attention from really the deficiency that we have in terms of governance. We are not spending on education. We are not spending on health. We are not spending on livelihood. We are not spending on nutrition. And here we are planning to transfer a huge amount of money simply to the whatever the minimum number is to the poor population. So in a sense, it's an abdication of responsibility of what you should be doing of raising standards of living through other means.
Yes, sir. We will have to carry on this conversation after market hours. We just wanted to get an idea of what are the numbers we should be prepared for 48 hours from now when the budget gets announced or the VOA gets announced. Professor Himanshu and Upasana, thank you very much indeed for joining us with your thoughts. It's more likely that there are only going to be announcements and should not be taken seriously. Okay, well, let's move on. It has been a good quarter for Bank of Baroda. An improvement in their gross NPAs has been led by the highest ever write-offs by the bank in any quarter. P.S. Jaikumar, the MD and CEO of Bank of Baroda, joins in now to talk about that. Mr. Jaikumar, good morning. Congratulations on a good quarter this time around. I wanted to start by asking you about the loan growth because, the domestic loan growth has been very healthy at 20% plus. What do you see as the trends for the next few quarters?
I think we would be planning to work within a 15 to 20% level of growth in the domestic credit. This, of course, is subject to the macroeconomic, etc. But I am fairly reasonably comfortable that kind of number is achievable. Okay. And this is the 5th consecutive quarter we have been in the 15 to 20% level, so it's not a last quarter event. And I think we can continue to, given the fact that we made the kind of investment in distribution, product, process, technology, etc. I think we can continue to leverage on those investments and the incremental investments we are doing, and thereby keep the momentum on growth. That's really the current thought process, and I think it's achievable.
Okay, Mr. Jayakumar, good morning. Once again, congratulations. The numbers have elicited a 4% gain in your stock. You already went into the earnings yesterday with a 3% uptick on the stock. But anyway, that's ephemeral. I wanted to know what is permanent. Is this margin sustainable or improvable? Very good set of margins, 2.67. We haven't seen that in, what, 17, 18 quarters?
I would think they should improve, and the reason I say this is for the following: that one, 30% of the book is an international book, and that is continuing to see an uptake as we replace low-earning assets with a better quality customer assets. And on the domestic side, as we continue to increase the provision coverage ratio, the net NPA numbers keep falling, then the dilutory effect of the non-earning asset comes off. I think that should happen on its own. But the other aspect of it is that we are also focused not so much, when we transacting with customers, is also getting a lot more focused on being able to do a whole lot of cross-sell, particularly on the fee side, getting float income. And hopefully as these things play out, we should see a continued improvement in the net interest margin.
Okay, so in that case, please tell us how much your current and savings account went up by. And because your overall deposits are up only 6.5% year on year, so I wanted to know how much are the current and savings account.
But if you look at the current,
please.
The current account savings account, the current account savings account continued to increase by about 10%.
Okay.
So, so the deposit part of it is, we can always grow. Deposit is also tied with the overall balance sheet position. One of the aspects that has been happening for us is our foreign currency balances have been increasing because of the runoff of the the financing on the LOU-based credit. So there is an overall liquidity, comfortable overall in respect of liquidity.
Okay. And credit cost, just that one. Credit cost, that is the one that's jumped, which has increased your cost to income. That's the one that's spoiling the margins. So will you be able to bring it below 3.05 where it stands?
No, I think if you look at this quarter, if you looked at last quarter, the credit costs were quite comfortable. I mean, not comfortable, it was among the better numbers that we had, about 1.32%. This quarter, part of the increase in the credit cost is also because of some additional provisions we have taken over and above what is required under the Iraq norm as a method of being conservative. Okay. That's almost close to 1,000 crores. So once you net it off, then we are beginning to see the continuation of a low credit loss to asset numbers. But we had to take this additional provision because we thought that's the right thing to do.
Okay. So the impending merger is the next thing that's on everyone's mind. On account of the merger coming into effect, is there a risk of the NPAs rising in the quarters to come? Maybe the gross NPAs going above that 11% mark that you're currently sitting on?
See, I think this gross NPA is something we should place less emphasis on, place more emphasis on the net NPA number. And our focus is to reduce the real risk, which is represented by absolute net NPA number as it relates to capital. So I think we should really focus as to whether the net NPA numbers would change consequent to the amalgamation. Now, I think there are the position is that we started working on this amalgamation, all the three banks, and at multiple levels. They're trying to get together some convergence on product, processes, etc., making some progress with respect to technology. But it's still very early days as yet. The plan is around the first week of April, we'll be able to share a much more comprehensive presentation with the press and media and the analysts, and thereby show how the new strategy could effectively result in the sum of the parts, the amalgamated entity having greater value than the sum of the parts. But the work it's a work in progress. Once it's completed, we should discuss it.
Okay, so you mean you haven't looked at the subsidiaries' books, the other banks' books at all? Can you give any comfort? I mean, all the brokerage reports you read will ask are only asking the same question: post-merger slippages.
So let's put it this way, that over the last 1 year, as a consequence of the Reserve Bank of India's involvement, the passage of time, the issues are all well known in terms of what the NPAs are And so I think we should have less surprises with respect to a difference between the projected, the stated book and the real book. However, there are differences in accounting policy as they stand between Bank of Baroda and the other institution, and there has to be convergence with respect to the accounting policy. We are working through these numbers, and that's where really it is. So if you ask me, do I know the numbers? I do. But the level of granularity, obviously not, because there is still Chinese wall in terms of sharing information. And so we're working on it. And I would say to you that, I would rather wait, I would rather come back and share the information with you. There are differences in accounting policies, whether it's depreciation, whether it's provision losses, coverage ratios. So I think we need to do some harmonization around this. And the general rule has always been you take the conservative of any three of the various accounting rules. So there would be some provisions as a result of it. But there is also a commitment for additional capital, particularly with the Dena Bank component of the balance sheet. So net-net, I'm hoping we would come out okay.
Okay. So just one final question from my end. In all the spaces that you operate in, being an industry veteran, whether it's retail, MSME, agri, or even NBFCs, where are you seeing lower amount of stress right now compared to, say, about 6 months ago?
I think we are seeing, one of the things we have tried to do in this analyst presentation is try to give you as much of data as is possible to give you a sense on the overall quality of the portfolio. This time we have taken a stab at the MSME portfolio and given a fair amount of detail as with respect to the rating and the external information, external data with respect to the scores. Now, all of the data shows that the quality of the portfolio, the incremental portfolio that is being originated is of a good quality. It also shows a continuous increment in the overall quality of the portfolio. So the progress, if I may say so, is all around. And we do still have some challenges with respect to the NCLT issues getting closed out, some of the telecom exposures being brought to a logical end. So some issues remain, but by and large, I think the quality of the portfolio has been showing improvement because the new origination quality has been high, and the basic machinery with respect to collection and other things have also substantially improved.
Okay, we have a couple of more questions on capital and issues after the merger happens.